Well, welcome into a daily editorial here on the KE Report. I am chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. And Jordan, let's first talk about a sector that you started covering not that long ago. You always had an eye on it, but then you recently built kind of a portfolio of stocks so that you could track this sector. That is the uranium sector. There was a lot of bullishness around uranium in the last about 6 months, and in the last couple months, uranium did start to move up, and some of the uranium stocks garnered a buy. However, that seems kind of short-lived because it kind of rolled over now on us, and it's a failed breakout. Can you discuss what you're seeing in your uranium portfolio and what it means kind of moving forward for these uranium bulls?
Yes, Corey. And I can't recall if you and I discussed this probably one time in recent weeks. September was a very strong month for the uranium stocks. And 3 weeks ago, they had a breakout on the weekly chart, and they basically closed at a new 52-week high. The index it still had a little ways to go to surpass its 2017 highs there in January and February, but it was still a legitimate breakout. However, Corey, 2 weeks ago, massive bearish reversal, very bearish candle, and then we had the same thing, a repeat of that last week. So, and this is the last week of the month, and so, by the way, looking at the monthly chart of my uranium index, it shows the same significant bearish reversal. So it's going to be a number of months now before uranium stocks have any chance to surpass these highs again. I mean, maybe the next low in uranium stocks will come. I don't know if it's going to be 3 months, 5 months, 6 months, 8 months, whatever. But basically, we have this big bearish reversal, failed breakout, as you said, Corey. And when you get a false move, that's generally followed by a fast move. So false breakout in the last 2 weeks, uranium stocks have been crushed. So I know there's a lot of bulls out there, a lot of long-term bulls on the fundamentals. From a bird's eye view, Corey, I really like how the chart is setting up here of this basket of uranium stocks that I put together. It's this massive multi-year base. Unfortunately, it looks to me like we're not going to see a real bull market in uranium for, I would be surprised if I don't see how it happens next year, given where global equity markets are. So you're just going to have to be a little more patient. And the last comment on this, Corey, is sometimes things don't work out. I mean, we got into one uranium stock and we were looking at getting into a couple others, and then this vicious bearish reversal happened. Sometimes things don't work out, and you have to cut your losses, and you have to know when you're going to get out. So from the standpoint of if you're like me and you wanted to, or you just started getting involved in the last month or two, there's really no reason to be in the sector right now. However, if you did buy the lows in 2017 or early 2018 and you have a good amount of profits and you've taken some money off the table, you're probably still going to be holding winners there by the time this market makes another low and starts trending higher again.
Okay, so right now, bullishness kind of off the burner. If you're not invested or if you're not in some nice gains, then maybe look to clear out of your positions, hold some cash, and wait for that pullback to settle out. But have, again, kind of a longer-term time frame, unfortunately, because of that failed breakout. Let's also talk about the U.S. dollar. The U.S. dollar is high on my radar because it is up about 0.52 today, about 96.46 as we're recording this, closing in on that recent high that it put in mid-August. Overall, the dollar is in a bullish scenario right now, trading at the higher part of its range. You actually correlate a strong dollar that could be good for gold. Maybe not in the tomorrow type time frame, but in the longer sense, good for gold. Can you explain why, please?
Sure, and then I'm glad you mentioned the timing, because I don't mean the dollar going up right now. It means that gold is going to start going up, Corey. But, Corey, a lot of the best opportunities to buy gold and gold stocks historically, they've obviously coincided with major dollar peaks. So what's been going on the last couple of years, I mean, even we had this big decline in the dollar in 2017, but that didn't do anything for gold. I mean, its big move was in 2016. And so we had this huge decline. I mean, I know that gold and gold stocks are up a little bit in 2017, but let's be honest, it was a horrible year given the huge decline in the dollar. So that being said, and by the way, Corey, we were talking about this many times throughout 2017. And, since that point, we obviously saw gold break down and now the dollar bottomed and it's trending higher. It's on the cusp of a new 52-week high. I'm looking at it. It's at 96 right now. Corey, look, our thesis for about 6 months or so has been precious metals will begin a bull market when the Fed stops hiking. Simply put, if the dollar continues to rise and it gets too strong, that in itself is going to act as rate hikes. It affects the rest of the world who have all this U.S. dollar denominated debt. So it's bad for the rest of the world, which, by the way, as we've talked about, Corey, the rest of the world is already struggling. Their markets are already in bear territory. Their economic data is softening. So what happens if the dollar from here rises another 7-10% in the next 6-9 months? I mean, that's not going to be good for the rest of the world. And in turn, eventually, that's not good for the U.S., and that's going to lead to, probably a bear market in the U.S. or recession at some point. And what happens? That leads to the Fed stopping its hike. So essentially, Corey, long story short, we need these negative things to happen in equity markets in the economy for the Fed to stop hiking. And the dollar rising is a trigger that can basically bring that moment much closer to where we are now. Now, obviously, the dollar going up in the short term, that is going to put some pressure on gold. But in recent weeks, Corey, gold has been holding up well in real terms. It's been doing better against foreign currencies. So one thing to watch for is the dollar is at 96.21 right now. If the dollar goes up to 100, it gets back to that high at the end of 2016, 104. If that happens in precious metals, they're sideways or they only go down a little bit. That's a good sign because that shows precious metals are strengthening in real terms and they're really not being that negatively impacted by the rising dollar. So I know it's kind of a contrary view, but essentially, Corey, a much stronger U.S. dollar, that's going to lead to the start of a gold bull market faster than, if the dollar was just kind of going sideways and buying its time and rising by a little bit. No, we want to see it looking like it's looking now, and that's like it's going to start another leg higher because that's going to bring us much closer to the Fed ending its hikes and a real bull market in gold starting.
Yeah, I agree with you, Jordan, and it is a lot about the Fed ending its hikes, plus that higher dollar. You have to assume that it's not going to stay high forever, no matter where it tops out, and then that can lead to a number of different issues around the world, plus also the potential of maybe more inflation picking up in the U.S. as the dollar would go through a decline. But again, right now, we almost just need to hope that that inverse correlation is off the table between gold and the dollar, and as the dollar heads up, gold just kind of buys its time, moves sideways. Let's talk about what's been going on with gold, though, because gold has been generally recovering after that bad summer. Stocks have also been moving up, but not in a broad sense. It's been a very selective rally. And still, GDX, GDXJ haven't even got back into that range that they were in for a year and a half. Something that you follow closely and share with your subscribers is this advanced decline line. This continues to be weak, which has you worried and a bit skeptical about the long-term nature of this current rally. Can you share that, please?
Absolutely, Corey. Yeah, go back to the low in January 2016 or even the secondary low that we had in December 2016. And the advanced decline line coming off those lows just exploded higher. And at a significant low, that's what you're going to see. I mean, if you're looking at any market or any sector, you're going to see very strong participation because that's what happens at a significant low is essentially when a market or sector comes off that low, it's a strong move because of the participation. You have 95% of the sector basically doing a V bottom at the same time. And that's what leads to very strong moves off bottoms. We have not had that this time. I mean, I'm surprised at how weak the advanced decline line, and this is for GDX, by the way. I'm surprised at how weak it's been. I know we don't have a chart here to show you, but you're just going to have to take my word for it. It's been really weak, and that basically argues that this rebound isn't that sustainable. And, yesterday, we saw gold hit 1240, 1241. I still think more likely than not, Corey, we're going to see gold hit at least 1260. Absolute best case scenario on this rally is probably 1270. There's a lot of moving average resistance in the low 1270s. And, the miners, they put in a bearish candle yesterday, and they're kind of repeating that today, although we do have a couple more hours to go in the trading day. Given that I think gold still has a little bit more upside, I think the miners may have a little bit more upside, but this is a move that I was looking to trade a rebound, Corey, and we decided not to get into this move. It didn't get as oversold as I wanted, and we'll see. I think as I said, there's probably a little bit more upside in precious metals, but given how the dollar is acting right now, Corey, and given that gold and gold stocks are a little bit closer, somewhat close to strong resistance, we've probably seen the best gains for this rally. It wouldn't be a good idea to hope for that much more upside. However, Corey, that being said, you made a point about it's selective. There's still a lot of companies out there in the junior patch, and there's a good number of those that their charts are acting well. So I think you have to, all hope is not lost. You just have to really be a stock picker, until the Fed stops hiking. And I think if you're a good stock picker and you do your research on individual juniors, you look at the technicals, you look at the share structure, you look at the exploration potential, there are going to be winners to be found. So I think for precious metals investors, that's what you have to focus on over the next couple quarters. Be a stock picker, try and find those hidden gems, those winners. That's what you have to do until the Fed stops hiking.
One thing else to consider here, Jordan, is that the precious metals sector is very much ignored. There is still money watching and investing in some of these companies, as you can see by some of those select stocks moving higher. But it really doesn't take much to move some of these stocks in terms of money flowing into the sector. And that's why I think something like the advanced decline line is so important, because a broad-based recovery would show more money hitting the overall market rather than just these select players taking this sniper approach at certain stocks. Do you have a comment on this as well?
Yeah, it's a fantastic point. It's selective what's going on, especially in the junior patch. And again, not to beat this dead horse, because I've been beating it every week for about 6 months, but the fundamentals for precious metals are not going to turn bullish until the Fed stops hiking. That's when you're going to see a lot more money pile into a really small sector. But Corey, you said it, it's very selective. The money is hurting around one or two names, and then, they make a discovery or they make a huge move, and then the money looks for the next winner, and they find that one, and then just that kind of cycle continues. And I think that's what investors really need to focus on. They need to look at the merits of individual junior companies. Do they have a catalyst? Is there value right now? Do they really have exploration potential? Is the retail float small enough that something good happens, the stock is going to move a great deal? Those are the things that we need to be focusing on right now to try and find those individual winners, because as you said, there's just money it's very selectively going into the sector. And again, as you pointed out, that's reflected by the weak advanced decline line. I'm sorry to say this again, but I'm just shocked at how weak the advanced decline line has been during this rebound. I would have expected even a little bit more strength, but it's just been so weak compared to other interim bottoms over the last couple of years. And I guess that's just another sign, Corey, that the big money is not ready to come into the sector and just push it all higher.
All right, Jordan, that's where we're going to leave it. It's always interesting chatting with you, and I always enjoy reading over your updates to subscribers. I think you do a great job of taking a very level-headed look at the overall gold sector and also some of the other factors that could drive that sector. Jordan, great chatting with you. Everyone, click the link below this interview to visit the Daily Gold and stay up to date on what Jordan is writing about.